my name is Patel. I'm the partner and CEO of Sapient Group and partner and CEO of Flash Group. With me today, I have a very good friend, Stephen Meade, that we've shared a panel and many a nights entertaining each other. And we kind of like clicked the first time we met. And I thought it'd be great to catch up today because some of the things Stephen is involved in is absolutely great. I'll let him talk it through. And some of our views, we are going to brainstorm, fireside chat on our views, where the market is coming from, where it's going to, with all this big boom that is currently happening in the bull run of Bitcoin and all the other altcoins. So with that, without further ado, Stephen, quick intro and let's get down to it, buddy.
Appreciate it. I'm playing with the monitors here. Yeah, so Maru, always fascinating, always fun. I joke, lifelong entrepreneur. I've never had a job. And people laugh about that. I was technically unhireable. In college, I couldn't figure out why I wasn't getting hired. And I realized personality tests, corporations want you to answer things and fit in a box. And my mind doesn't fit in a box. So I never would have made a good employee. I started retail stores in college selling watches. I still love watches. I match all my stuff. I wrote a couple books when I was 20 and had an infomercial. It was called Give Yourself Credit. The infomercial taught me a lot about marketing, television. When I was 22, though, my career started. I went to work at Travelers Group, which is a big company that went on to become Citicorp. Right. And I read 357 books in 6.5 years. And people go, oh, that's a lot. It's impossible. It's not. I read one book per week. I dissected the elements and I stacked skill sets. So I developed, it's over my shoulder here. I developed a very specific program called a bullseye belief system. Very unique way to think about how to create and build companies. And I've used that system to build 11 companies. 5, I was the first one in the world to have ever created something. 3 of them became public companies. So I have to be careful. People are like, oh, you're a startup guy. Yeah, I've had 3 companies that were public OTC microcap. First company, 96, went on to become PayPal. I was the first master merchant in the world for credit card processing. And just a quick story, Maru, I don't know how technology works. In 96, I was going to write a book. Begin with the end in mind, figure out exactly what you want and hire the best people to build it. So I wanted somebody in 96 to build a website, process credit card orders like my 800 number did, and send me checks and mailing labels. I wanted to talk on stage and cash checks. I'm really good at talking and cashing, and I suck at a lot of things in between.
Fantastic.
And so the first company I started was March of 96, building shopping carts, which didn't exist, using neuro-linguistic programming, moving buttons around to increase order conversion. And I used my merchant account to process orders. And we became the first master merchant in the world for credit card processing, took the company public in 99, close to $1 billion. And in 2000, it wasn't. So it was up and it was down. But yeah, through the years, I've done enterprise software, homeland security, mobile tech. We created a mobile company, the only one in the world that can put audio messages in outbound cell phone calls. So I tend to do these kind of austere things. 2000, I wanted to build a global currency. I wanted to build a global B2B settlement engine, and it didn't exist, but the world wasn't quite ready for it. Fast forward now, the project we're working on that I'm sure we'll talk about is we've built a global settlement platform for B2B, global currency. We're doing some really cool stuff. So I've started 11 companies, never had a job, but I am really good at vision and biz dev. I don't know how technology works, but I know how it works for me.
Fantastic, Stephen. Yeah, I mean, the reason why we clicked, I mean, very similar. Whilst you say you didn't have a job, since the age of 12, I was always wheeling, dealing, and being an entrepreneur. I sold things, even in my first corporate job, because Indians, you know, they go out, get a degree, get a job. Yeah. So I was locked into that. But 6 months after I graduated, I bought my first business. I built my first real estate property. I was going daytime to collect the money in a salary. Evening, I was doing a supermarket build, a real estate build that I bought, So I was always doing that entrepreneurial step, and that's why we click. And same part of my story as well is, when I was even in the Sun Microsystems, which is where you started in .com days, where I was there in the Valley and UK and Europe, we helped create a lot of these people, and I was known as the disruptive guy.
Yeah.
None of my managers and CEO could manage me. They said, you are like a business in your own little business unit. I used to have my own logos inside the company. So I created my own
entrepreneur before entrepreneurs were cool.
Correct. We used to call it an entrepreneur.
Yeah.
So I had my own logo, branded caps and shirts and umbrellas and golf bags with my own logos for criminal justice, which became known throughout the world, So I was the guy. You talk about Homeland Security. So I've been to your Homeland Security, all your NSA guys, FBI, Scotland Yard. I was on the board of them. So I work like an entrepreneur in my own business unit, and that's what made it crazy. So the story I told you before we got on air as well is all entrepreneurial.
Yep.
And, people like us are rare, but more importantly, talk is cheap, idea is cheap, but who can make it happen? So you don't have to have, as you rightfully pointed, the credentials to say, I worked in this company. You made shit happen, whether you are technical or not. That's all.
Yeah,
you knew where to go, how to bring the pieces together.
One of my comments real quick, Maru, I'm sorry. I have a bunch of sayings that I've created, quotes and sayings, because
I've got thousands of these.
Yeah, you have to.
Thousands.
One of my sayings is, ideas are easy. Execution is an art.
Yeah.
Like, I have this idea.
You commented on my Facebook when I put one of mine, didn't I? You commented on it. Yeah.
Ideas are easy. Execution is an art. It is an art.
It's about who can make it happen. That's what I said. I get ideas every day, but can he make it happen?
Yep.
Every day. It's those who can make it happen. That's what you want. Execution is king. I used to say, plenty, thousands. Let's get down to your view. Where do you think just now with the bull run with Bitcoin, the whole thing about DeFi, NFTs, where it's going, funding, how do people get funding? My view is it's changed. The whole model of getting investment, liquidity, startups, there's a totally new model. I was never a fan of ICOs. However, it has a role with ICO, IEO, but the traditional equity play types of ways of funding new startups, I think is almost history, but it exists. However, there are new ways of doing tokenomics, ways of doing liquidity and sharing it. And I have a big saying of how to create, one of my mantras of financial inclusion and beyond, but is socio-capitalism, how to bring socialism and capitalism together so that wealth is spread equally. And in this DeFi, NFT, tokenomics way of collecting funds, I think that's going to happen. I'd like to hear your view.
Wow. If we had hours, you and I, I'm sure could fill the stage.
As we usually do. Yeah, exactly.
I will give it to you in sound bites as best I can, and I'll remember the arc of the question, and we'll get through it.
Mine was sound bites, by the way.
It's fine. Bitcoin to me, I think, still has a huge resonance up. Bitcoin to me, I believe, is like a brick of gold. A brick of gold's $500,000, and the market cap for gold is 10 trillion. A Bitcoin is 50,000, give or take, and the market cap's $1 trillion. If Bitcoin moves up to equal the market cap of just gold, it's 50,000 to 500. So Bitcoin, if Bitcoin becomes, I don't believe it's a currency. I don't believe it's a payment. I believe it has some interesting characteristics, just like gold and gold coin. If it gets up to global acceptance, which I believe it will, 90% of the population's never had access to financial instruments. If it moves up to that, that's $100 trillion market cap. There's no reason a unit of Bitcoin can't be at $1 million, just like a brick of gold's at 500,000.
Absolutely.
So I think there's this shift of how the financial systems are going to view assets and the democratization, which actually is going to move us up. I'm going to skip the NFT stuff for now. When tokens came out, I use a term I call retrospective evolution. Retrospective means how can I look back and go, what's worked before, and then evolve it into the new tech. The ICOs to me, and the IEOs or whatever we call them, Maru, in the US, we have OTC cap stock, micro caps. Pejoratively, they're called penny stocks. And at the bottom are pink sheets.
Yes.
Well, what do we know about penny stock pink sheets? Highly volatile. The risk profile is there. Most people, if they're honest, they'll buy a 10-cent penny stock, not because they own equity. Equity is a fallacy. It's greed. You buy a 10-cent penny stock hoping you can sell it for $1.
All about greed. You got it.
It's all about greed and speculation. So when the ICO tokens came out, I was like, oh, this is kind of fascinating. If you look at it as a micro cap, how do you manage a micro cap penny stock audience? It's press releases, it's attaching big names, it's managing, it's all marketing. And eventually, if you build a good project, you move up off the pink sheets to the OTC, and the goal is to get to NASDAQ. You know, your goal is to move up legitimacy as a project. That's how I saw the ICOs. But in the US, they had created a thing called the Jobs Act. Yes. The problem with raising capital is it was very laborious. You're trying to protect the average investor, what's called a retail investor. Yeah. I used to make the argument in government, you want to protect somebody from putting $10,000 in my company, but you don't protect them from spending $10,000 in Vegas on a weekend. Absolutely. You know, so if somebody wants to make a decision with their capital.
Yeah, who the hell are you?
Yeah, so the Jobs Act all of a sudden allowed democratization where people could get involved early as angels in equity. And but here's the problem with equity. I'm trying to give you the sound bites of the DeFi world at the end, I think. If I invest as an angel, you asked me before, do I do any investing? I don't know that I would ever invest in equity again as an angel. Because as an angel, you're locked up 3, 4, 5, 10 years. I had friends in Uber that on paper were great. They couldn't get out for 10 years. Yeah. The angels are usually the ones that get hurt because they're early equity and the big guys come in and crush them. The decentralization of blockchain and tokens allows you to do what in retrospective is called a direct public offering. It's kind of what you call it as social capital.
Correct.
If you're a company and you've got 4, 5, 10,000 people that like you, customers, if you could sell your stock directly to them, in the US, you can do that with OTC and a direct offering. So the blockchain allows you to create a token, which to me is like a penny stock, market it directly to your customer consumer. But early on, it's pure speculation and greed. You know, absolutely. Yeah, people go back, they're like, oh, well, what about gold? Gold doesn't make anything. Or not gold. They're like, Bitcoin doesn't make anything. Bitcoin doesn't have any employees. And I say, how many employees does gold have? Like, gold has no employees. Gold's an asset. Oh, well, then what about, they're always moving the goalpost and I know how to fight that fight.
Yeah, absolutely.
I think the decentralization of allowing somebody to invest in a project early that they like, but giving them liquidity on an exchange is going to completely change the dynamics of funding at early levels and big levels. I think the direct to market is going to change it.
Absolutely. And that's what I see happening as well, because, you know, the main thing you said, and I've been an angel and a VC like you have, and you find these tokens being created, but there are now, to say the pumps and dumps and the whales playing you around, they say, you have to have it vested for 6 months, 12 months, 18 months, whatever. I think that is good. So you can only take a small percentage out so you don't get the dumps coming in. Because what happens is people invest first and the day it's on the exchange, boom, you get the dump.
I hear you, and I've had that happen.
I'm sure you've been caught in that as well.
But I fixed it.
Yes, but it's a difficult fix.
It isn't. I fixed it. Retrospective evolution, Maru. I'm like, wait, I've had pump and dumps. I've had my guys dump in our round right now, which we'll probably talk about. We're raising 5 million or 10 million equity, but I created a token. So the equity's at 50 cents.
Right.
Then I grant a token at 50 cents. I hold it in Treasury wallet. until our token gets a value of at least 50 cents on a central exchange.
Yes.
So I tied the hold not to time. I tied it to price and said, let me get the value.
We have a similar thing. We've pegged it with gold, and we keep an intrinsic value versus what the market value. So we maintain that it will never go below this price.
That's fine, and that's a fun way to do it.
Mine was, to something. However, we have a velocity program to make sure there isn't too much of this going on with all the pumping, dumping, and
mine's the same way. But I went, wow, this is fascinating. Let me hold it to time. But I also hold it. You mentioned earlier a DeFi, so the decentralized exchanges.
Yes.
So I call them autonomous exchanges. They run without oversight. Where we put our term sheet on a CFI, a central financial exchange, like a Centurion out of Dubai or a GBX out of Malta, because I want it to be a structured token on an official exchange, because I look at our Moneta Pro token like a stock. I don't want to be off in the Netherlands.
Yes.
So I said, look, if we're on a central financial exchange and our token hits at least 50 cents, then we will deliver it to the investor and they can do what they want with it. But before that, it's going to be low. I just didn't want them dumping into the market at a lower price.
And that's a good point, because, that's why I think centralized exchanges have a benefit as well. And the decentralized, I think, will be the speculative pink sheet way of doing things.
That's exactly what I've been telling people.
How I see it.
Is you can go list on a DeFi exchange, which is like a pink sheet. It's unaudited.
It's exactly that.
Pure speculation. But eventually, if you move up, just like in the pinks on the US, you move up and get audited. You want to be more legitimate because your project has more legitimacy, more money can come in. The central financial exchanges, I think, have merit for projects when they become legitimized projects.
Serious projects. Yeah, absolutely. When they're a serious project. And you know what? Coming back to tips for the viewers, I would say, do the due diligence not only on the type of token it is, but do a due diligence whether they have a real serious roadmap of how to protect volatility and how to protect them being listed on some of the big exchange to be taken seriously rather than just being on a Uniswap, SushiSwap, or whatever, right?
I totally agree, Maru, but this is what people don't understand.
But that's why I said we need to make them understand that.
Getting listed isn't the issue. Like
it's easy.
I know the heads of some of the biggest exchanges. We could go get listed, but let me back up. I'm going to tell a quick story. Years ago, I developed a product that saved water. It was a little box, saves water, plastic power, so it drops in the toilet. It had a whole, and the head of Walmart was a friend of mine. He's like, Steven, we'll put you in Walmart. And I turned him down. And this is what people don't understand. They're like, why would you turn down Walmart? I said, just because I'm sitting on a shelf, nobody knows I'm there. They don't know what I'm doing. If I don't have a market program, so getting listed on an exchange, if you don't have campaign funds or market makers or the ability to have a roadmap to drive awareness, the exchange listing's irrelevant. You're listed on a shelf. That's why I said it's that next level where people are like, oh, are you on an exchange yet? I'm like, no, because I don't want to be on an exchange until I'm in customer mode with a roadmap of releases that can drive the awareness. Otherwise, it's a waste.
Yeah, that's why we build our community first before we go on the exchange. That's what we do.
Good for you. I didn't want to, I joke, I said, they're like, well, why don't you have a big Telegram community yet? I said, I didn't want to manage 5,000 people chirping at me. When are you going to go out?
No, but it's not you who's doing it. You're just
I know, but even that, Maru, people don't understand. Even for you to put a channel together, somebody has to manage it.
Somebody has to manage it. No, and it's not one person, by the way. We have 3 of them contributing all the time.
Yeah, people don't know that. So
it's heavy.
Yeah, my first public company had 22,000 shareholders. Like you have to manage that community with activity and stuff. And if not, you piss them off.
Training, what to say, how to reply, because of course you'll get people pissed off. Of course you'll get happy people. How do you get them all?
Yeah, you got to insert when you have negative sentiment, you've got to jump
be there fast, and you got to block people, and it's nasty business. So you got to do also, because in any successful project, there will always be haters, no matter what
Always. But if you look at it
and
again,
you'll get the spammers, and you'll get the competitors, and you'll get all these people throwing trash. However, you need a community, and that creates attraction before you go onto the exchange.
Totally agree. And so that's where I think the retail strategy, like for us in our round, we're doing equity plus tokens, and the equity is set up for the institution guys who still need that equity. Then I've got a discount on the token down to 15 cents for my angels. So now my angels get the token liquidity earlier than the institution guys because I need some of that volume. So we're like, okay, how do we build a sort of retail community early while we're building the company? But I held the institution guys at a 50-cent hold. My angel guys are in at 15, so they can get that liquidity a little quicker.
Yeah. Yeah, no, absolutely. And that's what we do. We block it as well. That's another tip I tell people. It's best to block it and keep some for fluctuations, keep some for volatility, buying backs for the dumpers, things like that. You have to do that.
It's all just like managing. It's like managing a microcap company.
Microcap company. And this is the problem I find. A lot of the startups who've never managed money, never run a company, never made losses to learn, and never gone pop. You give them this, the first time they have a problem, boom, they are dead.
Yeah.
People like us, we would know what to do and put the policing mechanisms.
Yeah, you and I are still here after the COVID gap year.
And the .com crash and the finance crash and the property crash and la, la, la.
Exactly. Yeah, so the whole aspect for me of blockchain and using it as a type of financial instrument is fascinating because not only does it add liquidity quicker, it adds liquidity for the early guys, which are the angels, who are usually the ones who are crushed in the companies that are most successful, but now they can get out. And then it allows a company like ours to raise capital more efficiently. If, to your point, Maru, if that community's there and you've got a good project, it's easier to do an international token listing than to do a US listing to try and go through the exchanges.
Yeah, the US listing, I mean, I'm sure you know a lot of new startups and token startups and all these, they avoid the US for investors for obvious reasons, And
you can now with technology. Again, another one of my jokes, I have so many. In one of my speeches, I say before the internet, there was no internet.
Yeah.
And back in the ICO round, my institution guys like, there's no way you can raise $50 million in 9 minutes. That's impossible. I said, no.
Of course you can.
If you have a Telegram channel with 10 or 15,000 people who like you and are excited about your product, the minute you put the offer out, you could sell out. It's like selling out tickets to a stadium.
Absolutely.
Before the internet, you couldn't do a lot of things you can do now.
Absolutely. Stephen, we've talked about helping people on startups, how to structure tokenomics and all that. Let's hear a little bit about your project. I'm quite interested in what you're doing. Quick 5 minutes on that.
Yeah, if I can, I'm
what
going to
kind
do
of mechanisms you have in place, how much you're raising, what's the differentiator there, things along those lines.
If I can, I'm going to do it as a share screen, and I'm going to go, Maru, super fast.
Go for it.
Anybody that wants this, that's interested, I can send it to them. We have all kinds of information out, but I like the visuals.
Yep, absolutely.
So the company's Moneta Pro, it's a pre-series A, so the software is built, but enterprise, SaaS, B2B, award-winning. We've actually won 8 awards in startup contests around the world.
Just do the slideshow so we can see that.
Yeah, market, $17 trillion market. It's companies like Ford. So our target market are these big companies that are doing what's called corporate barter. Big companies around the world. What they actually do is they trade. I've got cars, you've got computers, let's trade. But you have to negotiate every trade. And they say, why don't you sell for cash? Well, the corporate barter market's fascinating. You trade at full retail, you acquire assets without paying taxes, and you don't spend cash to acquire new items. So there's huge financial leverage, but nobody solved the problem. It's kind of like the old days of barter. If I've got chickens, you've got milk, I need money. We created a portable credit as a type of B2B payment tool. So there's big companies saying it. I'm going to skip management. We've got CIO of BlackRock, a bunch of people. Basically, it's an enterprise marketplace. So unlike eBay, that's a username and password, ours is divisions, departments, rights authorities, a lot of things you need at the enterprise level. Companies can list assets and they can pick multiple settlement options. So you can't do a $5 million settlement through eBay or Amazon because it's a credit card network. Ours not only does wire transfers, we actually built our own called a GBUC, a business usage credit. So I built my own digital settlement unit. It's not blockchain. It's not a token. It's technically a store credit. It's like if you had $1,000 credit in eBay, you could only spend it in eBay. I built a global B2B business currency. Then we integrated the invoicing into IBM. So now this is over the pay grade of most people in blockchain, Maru, but you'll get it. I integrated my invoice where now I can go into Oracle and SAP in the asset modules and update assets for compliance. So I can remove asset records and write audit trails. We're a bunch of companies in discussion. I created a formula called efficiency, liquidity, and trust for value. Private label, we're back in Homeland Security stuff, and that's about it. $5 million round, equity plus a separate token offering, and then a bunch of contests that I've won.
So why are you going equity only rather than doing just a token sale? How much equity are you diluting?
I'm not doing equity only. That particular presentation I showed you was for the institution and family office people who may not understand blockchain.
Yeah, they don't understand blockchain or tokenomics.
Right. So I have a separate appendix to the slide that says, if you understand blockchain and tokens, I'm doing an equity round at 50 cents.
Sure.
And then I'm gifting them a Moneta Pro token. I'm giving them a token at 50 cents 1-to-1.
Okay.
So now they own a 50-cent token that's held in our treasury wallet in Malta. We don't deliver tokens. They're not investing in it. They don't own it. There's not an airdrop. There's no liability. It sits in our treasury wallet as a grant. If our token gets listed on a central exchange, like we talked earlier, and hits a price point of 50 cents, that investor can say, oh, well, we still own equity over here, but we want the liquidity of the MON token. I deliver it from the treasury wallet in Malta. Anywhere in the world they want delivery, that's the best tax jurisdiction at that time. So I created a separate liquidity platform. And the third leg of the stool is we're going to raise additional capital through the Moneta Pro token exchange, the exchange offering. And again, this might be over the pay grade of some people, Maru, you'll get it, is if we raise 5 or 10 million on the exchange, that capital comes back in the company as non-dilutive equity to my A round. Rather than doing a $10 million B round of equity, I'm like, guys, you want our token to be successful. You want, as an investor, to promote and support it because I can raise additional capital without diluting our first round position.
Yeah, because everyone wins then, because they have an equity on a company valuation, which has grown, and they've got a token that increases, and C, you don't have to go further dilutions anyway.
Bingo. Yeah, so like I said, I like retrospective evolution, but I also put a lens on and said, if I'm my own investor, what kind of deal would I want? Do I just want
and that's exactly what you want.
Yeah, I want tokens and equity.
Both.
Give me a double win, and I'll support it to the market.
Absolutely. And I see a lot of these now coming up, but 2-3 years ago when we did it as well.
Yeah, I mean, I wrote the first.
I hated ICOs. I said, I only believe, and I remember that argument with Tim Draper in San Francisco in your neck of the woods, when ICOs were red hot 3-4 years ago. And I said, I don't like ICOs. I don't like ICOs for these reasons. I'm a real estate look, feel, see, touch person.
I wrote the first thing on this. I called it a tokequity offering, a token in equity. I wrote the first.
I call it asset. Yeah, I call it asset-backed token or asset-backed.
I called it a tokequity, and I wrote the first one in 2017.
Yeah, that 2017 is when I was talking about it.
Like, so I love the space, but you have to be creative.
You have to be creative, absolutely.
Yeah. So we have
coming back to your the project. Send me both those slides, the token one and the equity one. I'll see if give you some feedback if you want,
Sure.
or whatever. If I can be of help as well, not an issue. But Stephen, the thing I like about the project is not only the tokenomics and equity side, but also creating capital, B2B, or even B2C it could be, or C2C. It doesn't have to be a particular business or a client. And I have another phrase I'll give you.
Okay.
I don't like DeFi. I call it PFI. So people to people distributed finance, right? So I've been calling it PFI for last year and a half, because this is what you're trying to do as well, in a distributed manner, to
Correct.
create some form of tokenomics where people can share only after the vested period or a price point has been met.
Yeah.
Otherwise, it's no point to give them the token when it's not safe, for one of better words, and for them to pump and dump it themselves, right?
Correct. And so I love the fascination of the front end liquidity, but you still need that structure and control and, traditional sort of metrics of building a company. I want to build a company, but I also don't want to wait 10 years for the liquidity. Like Palantir with Joe Lonsdale and those guys. Palantir just went public. Good for the 17 years.
Yeah.
17.
Real companies. And this is where I think you and me, we are on the same page. 99% of what we're seeing just now will go. And we've seen it even during the .com days, because they don't think like a company. They think, token this and they don't think like a company. Yep. That's half the problem.
Can I show you something, Maru, that we have that I want to share with your audience? Because this is how I structure. When you said send me the PowerPoint.
Yeah.
I'm going to show you how we have our investment stuff structured to share with your audience.
Sure. And yours. Yeah.
I don't share documents with people.
Yeah, actually I don't as well.
Yeah.
So you put it on a drive or something, right?
The minute you share a document, it's potentially outdated if you change anything. So I have an investor page. This is the link. And on here, I have a little video. What is Moneta Pro? PayPal 2.0.
Right.
Then I have an introduction video. And I tell people it's 1 minute and 36 seconds. This sort of introduces it.
Yep.
Then I have an executive summary, 2 minutes. This is the narrated PowerPoint, so I don't have to get you on the phone, and you can download it. And if you're interested there, I've got a 1-page, a 4-page, the full business plan. Then I have a complete narrated presentation. What I do with venture guys, a lot of times I'll say, look, guys, the full presentation is there. I don't need your team sitting in a room watching me for 30 minutes.
Correct.
Watch the presentation in advance. Ask questions, write your questions. So when we're on phone, it's more efficient. So I have this page that I can update. And if I change anything, I just update it in the background.
Yeah. What are you using for this? You're doing it all on your website? Because we do a similar thing with Discord and Twitch.
Yeah, this is just a WordPress site.
WordPress site.
Yeah, in the back.
Yeah, it needn't be simple. So that's another good tip for people,
Yeah.
The best way to do it. Absolutely the best way to do it.
It's a simple thing, and there's a tool that they need, not a tool, but a plugin called Meade.
It's a plugin. Yeah, it's a plugin. Yeah,
and
it's
Meade replace just says, I'm going to replace the new document in the exact location as the old document. Then anytime I update stuff, my webpage is always consistently up to date with messaging.
Absolutely. Latest version.
Absolutely. Yeah, so I'll send you the link to that.
So it's Moneta Pro, right?
MonetaPro.io.
Yeah, I've got it down.
Yeah, the word Moneta stands for money. The very first seashells ever were the Moneta shells.
There you go. From which part of the world?
The South Pacific is where they actually created. Yeah, so it's monetapro.io/investor. But I'll send you this.
Yeah, that's what
the first forms of money ever were the Moneta seashell. That's where the word money comes from.
Yep, great stuff. Superb, Stephen.
So from a funding standpoint, I have that document that's the investor one. Then I have a separate one that's almost identical. That one is the token one. So then I've got a video on tokenomics, exchange offer. Like there's just an additional block in there talking just about the token side for people who want to understand it. I can send them there and say, here, watch this.
Fantastic.
Yeah, I don't jam them together because a lot of people don't understand it yet.
Fantastic. Stephen, that was fantastic. I wanted people to understand that there's different ways of doing fundraising, different ways of presenting, different ways of doing it through the web, and different ways of generating cash, liquidity, pricing without getting burned. So thank you for that. And we can call it a wrap. Any final words?
Begin with the end in mind, figure out exactly what you want to do. Find the best people in the world to do it, because you can't do it all. And up here on my shoulder over here, the Bullseye Guy. So I have a podcast at thebullseyeguy.com. A lot of this information I put out there. I just did one of the last ones I did was in December, and I brag about this one. 12, 14, 20. Bitcoin had just crossed 20,000. And I did my podcast on the top 10 reasons Bitcoin will go to 100,000 in 2021. And I get, oh, that'll never happen. But what I listed in there was the number of retail consumer investors coming on with wallets, you know, the amount of institutional money that's getting moved across. And number 10 was I called ego. And I said, here's what's going to happen is if a Michael Saylor, a Scaramucci, and Elon Musk, if they start putting corporate money into Bitcoin, they're going to have to go on TV and brag about it to justify their decision. And I said the ego is going to drive the market because they're going to have to be on talking about it. All of the things are happening. So I like to sort of put things out there to share.
Let me give you the similar brag. So in September last year, when Bitcoin was right low, yeah. So I do a thing with Think Tank Community and Digital Week Online. And I said, this is the lowest. Please, guys, jump on, because it is now going to start happening. Why? Because the chart, and I have this rainbow thing, why it happens. Every time after a halving, it goes down and it goes up.
Yeah.
Always for the last 4 years, you see. And then I see the next thing. Why institutions, so MicroStrategy at the time had just come in and dumped 1 billion, right?
Yeah, he bought it at 11,000.
Yeah. And then you also had Grayscale. Quite a few people started dumping money. In the December call, I said, look, I think it was around, it hadn't hit the record of the 18,000 it had to break, or 19,000. I was on a call with Tone Vase.
Okay.
You know, of course, you know Tone. Yeah. And we both called it. We said, it's going to go up now. And I said, easily before the end of the year, it will surpass the 2017 peak of 19,000. It did. It did. Then first week of January, when it was around that 20,000 floating, the same conference, the same online think tank thing, and it was with a couple of friends of ours, you know, Rico, people like that. I called it again, and I said, you know what? By the end of Q1, I can see 55,000.
Wow.
By the end of Q1, 55,000. Rico goes 35, 38. And if it goes down, it will recorrect around the 36. And if it goes recorrection, it might go to 26. But if it carries on going over, so his call was around 45, 48. I said, no, minimum 55. And these are my reasons, by the way.
Yeah.
And then I said, at the end of the year, 150,000.
Wow. Okay.
And this was first week of January, 150,000. I said, however, it depends on even, and something we talked about, XRP ruling with SEC.
Yeah,
I said, all of this will impact the coin market, because you could then say, what's a security? And then I did a few videos, you should go on my channel, about why XRP will win as well. Okay.
Yeah.
So go on the YouTube and listen to that.
Very cool.
Then I said it will be minimum 150 by the end of the year. And these are the reasons why.
Yeah.
And I mentioned not only the BlackRocks and Elon and people like that. I said, when you get one or two big names going in, that's it.
Yeah.
Because then it will be like a moment. And I compared it to the .com days, and you'll remember this. I said, I remember having a haircut in the Valley, and so, Steve Jobs came here, and your Scott McNeely was here, and they said, buy this stock, buy this stock. The fucking guy didn't know what a stock was, and they were buying it just because someone said it. And I said, that's what's going to happen to Bitcoin, because it will then bring up the altcoin seasons as well, because the cleverer guys will say, I'm not happy with 10, 15%. I want 20%.
Yeah, if you've got a higher risk profile, then you move out. It's no different than, yeah, the investor that invests in gold may put money in the stock market at the NYSE or tech at NASDAQ or down at the OTC for volatility.
Absolutely. And Rico and me, we joke about it. And he says, why are you still in gold? I said, because I believe in a balanced portfolio.
Yeah, that's all it is.
As an example of the burns in .com, property, finance burst. Have a balanced portfolio. And I've done another video on how your investment portfolio should even look like. So don't throw everything in Bitcoin.
That's what people ask me, Maru. They're like, should I invest in Bitcoin? I'm like, what's your risk profile? What's your what's your time frame? What's your appetite?
Can you afford to lose the money? If not, how much can you afford to lose? And then I said, this is the spread you should do. I did a very nice video.
Well, anyway, great chatting. Like I said, you and I forever. On and on. Here's my technical one. And I'm not a technical person. I don't look at charts, but there's a lot of people.
And I don't. And that's the video I did. If you're into traditional trading, and look at that video as well, forget that principle in crypto trading, because there's whales, there's all these market sentiments, there's FOMO, pumpers, dumpers. It's highly unregulated, highly volatile. So don't always look at the Fibonacci's and Bolivares and MACDs and all
of that. So
it doesn't always work.
Yeah, so what I created is not the stock to flow model that people are trying to overlap. Yeah. I call it the B2F, the bond to flow, meaning if companies, and this is kind of what Saylor and some of them started doing, Michael Saylor, if companies, hedge funds, portfolios, and pension funds move 1 to 3% of their bond portfolio over, just as an allocation, that's 100 trillion that would move over if the bond to flow model moves.
Absolutely, we are on song. And I said the same example beginning of January. I said one of the reasons is BlackRock has put in 200 million. Now imagine BlackRock does a futures trading, because that's what they were doing. And they even do it at 5x. Even if they do it at 5x, that's 1 trillion just from BlackRock. Do you think BlackRock's going to stop at 200 million?
BlackRock, Larry and the team at BlackRock are spending over $1 trillion on ESGs and the eco side. Once they move over.
So I said, all that will go. Imagine them leveraging it even 5x.
Yeah.
Soon you've got 100 trillion in this whole market. And this will happen. Now go and look at the best hedge fund, what their performance has been. Look at the best real estate. Look at the best bonds. You think these guys are not going to put even 1% of their money into this business?
1 to 3%, the bond to flow model. Let's hope it happens.
This is why I think it will go to 150 by Q1.
I hope so. I only put it at 100. So
no. I said 150 by the end of the year and 55 by end of Q1.
You called them both.
Both of them.
Great stuff.
Anyway, great having you, buddy.
I love you and all your work and your audience. So we'll catch up soon.
See you soon. See you soon, buddy. Take care.